Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, viewing the Australian dollar from a technical perspective, you can see that the market has fallen slightly further towards its objective, which is around the low 71 region, or even extending down towards the 70 cent. From a downtrend that holds in place, and also with the midway point on the RSI breaking down, does give further evidence that the bears have slowly putting their claws into the market, and no doubt will eventually see the fall continuing. Any advances views the resistance around 72.15, where this downtrend comes into play. The euro took a very sharp turnaround from this hanging man and therefore plummeted through the support that was around 117.85 and now looks back towards the bottom side of the range around 117 or even lower towards the 116 region. With the RSI backing up this view, just need to see the MACD to follow in suit and marry up to promote the downside. Nevertheless, the US dollar, which measures the greenback against the basket of six major currencies, rebounded around from 93 up to about 93.59, the high. Therefore, does potentially support this view that if the dollar does increase, then the bears will remain with the euro. As you can see, dollar yen is a little bit mixed at the moment as it toils around this level of 105.40. It is assessed from the RSI that the MACD should marry up eventually and see the market fall towards the lower side of the range around 104. The pound takes its very sharp turn overnight and now potentially has further risk to the downside. I would like to see a little bit more evidence, though, to come out with a bearish call back to 126. Still, from the very heavy candle that's close to a Marubozu, could actually see the move through 128.70. If so, this would reinstate the downside and expect to see the target at below 126. This in terms has seen the sterling yen reject the level of 138 and take this trend line out and now looking towards 135.80. A break beneath there would give further emphasis on the downside and look towards this region around 133, still keeping in focus that 131 could be on the cards. But we would like to see a little bit more evidence from the MACD to support the bear case and the break of 135.80. Well, with the break of 1,901 to 03, the call was to 1,883, which was reached this morning. The posted low of 82. Now attempting to recover, I feel the market has still got a lot of work to do to at least give the call for a full recovery. It would seem a bit of profit takings coming in from the bearish fall last night, and with the RSI through the midway point could see further risk if we take out the level of 1,883, as this would expose the region of 1,849 to 52. Little to say about oil as it trades sideways after briefly rebounding from the lows of 39.5, but still seems to be struggling at this point due to the RSI. Let's see if the market has potentially enough weakness to take the market back to the bottom side of the range, close to about 39. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoyed a great start to this new day.